Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is Tuesday, May 14th. We are going to take a look at one out of the consumer staple sector, Krispy Kreme's. And I'm surprised that it is actually in the consumer staple sector. I would assume this would be a consumer discretionary company, but that's what they have it listed at. So let's jump in. And if you have not done so or you would like to help out the channel, go ahead and hit that thumbs up button down below if you find any value in the content. Hit the subscribe button. Make sure your subscribe button is clicked. Join this journey to financial freedom. Join the vested interest community. Hit the notification bell so you're notified whenever we put out any new content. I do stock pick of the day videos like this Monday through Thursday whenever the market is open. I also do portfolio updates every Sunday morning. So again, make sure that notification bell is clicked so that you don't miss out on any of those. Drop a comment down below. Let me know if this is one in your portfolio. Is it one you're watching? Is it one you're avoiding altogether? Or if it is in your portfolio, is it one you're thinking about selling? Let me know. Love to hear from you down in the comment section below. Now this is the vested interest stock screener. This is how I set up the videos. So we're going to run through this screener. At the end, we'll go through and see if it meets 5 of 8. If it's a financial company like a bank, we add in price to book. Then it would be 6 of 9. You can pause this and go through this. You can use this screener if you'd like. I would recommend tweaking it to your investing strategy. This is one that I like. Maybe you like some of these. Maybe you have other criteria you want to replace or swap out. But this gives you an idea of how I screen a company on a high level to see if it makes it on my watch list. And then if it does make it on my watch list, I do more of a deep dive into the financials of the company, find out a price I'm willing to pay based on a discounted cash flow analysis that I do, and then I wait for the company to align with that cost basis. Now back to Krispy Kreme. If you want to know more about this company, check them out, www.krispykreme.com. That's www.krispykreme.com. That is their homepage where I pulled this information from. And it's pretty straightforward. Happiness through donuts, right? They make donuts. They've been making donuts since 1937. They do sell drinks, but primarily they're a donut maker. That's what they do. So if you want some donuts, maybe Krispy Kreme is where you get them, coffee, that sort of thing. And I was not aware they've been around this long, but I did find this interesting, the changes over time to their logo, right? Going back to 1937 to 1978, 78 to 91. This is the one that you're familiar with here, pretty close to what they've got now. Krispy Kremes, they are here. And I did look at their locations. They are scattered across the United States. So let me know if there is a Krispy Kreme located near you down in the comment section below. It is definitely in Michigan where I'm at. My wife goes and gets them every now and again. My kids do like Krispy Kreme. They like donuts in general. I don't think they care where they come from, but Krispy Kreme is one that my wife does. There's also another little baker around the corner. It's more of a mom and pop shop she likes to go to too. They have some different types of donuts, but we do go to Krispy Kreme from time to time for a little snack on maybe a Sunday morning or something like that. Again, www.krispykreme.com. Donut maker, that's what they do. Now, the reason we're taking a look at them, down 3.33% on the day. We are talking about Krispy Kreme Inc., ticker DNUT. DNUT, right? DNUT. Don't DNUT. Maybe that's the kid in me a little bit. Be careful about the denutting. But DNUT, DNUT is their ticker. Closed out the day at $11.91. 52-week range as low as $11.52, as high as $17.84. So they are right up against their 52-week high, or 52-week low, I mean. Average or their market cap $2.01 billion. So they are a small cap company. A beta of 1.52, more volatile than the overall market, and you can see that volatility throughout the day here. Now, they did not have a PE ratio listed. That leads me to believe they're negative, which is not good. You want a positive price to earnings. Their EPS is negative 0.28 cents here, so that's not good. You're gonna see a lot of numbers on this one that aren't necessarily the best. Earnings date August 10th through August 14th, so tune back in there if you want to see what's going on with them. Forward dividend is 14 cents. They are, I believe, a quarterly payer. We'll see that here in a little bit. So very low starting dividend yield at 1.14%. Ex-dividend date, July 24th. So if you were to buy them now, you would be in line for their next dividend. Looks like the payout will be in August 7th. So July 24th for the ex-dividend date. You want to buy them the day before the ex-dividend date to make sure that you get them, but then pay out in August. Now, We're going to take a look at dividend yield theory to see if this one, well, let's jump back over here. One year target estimate, at least according to Yahoo Finance, is $17.23. So they don't see it getting quite back to its 52-week high here, but pretty close. So upside, at least as far as Yahoo Finance is concerned, is in regards to the price per share. And take that with a grain of salt. Now we're going to take a look at dividend yield theory here to see if there's a potential entry value. Typically, to do that, we would go to payout ratio. They don't have one. They are not growing their dividend, and they did not list a 5-year dividend payout ratio because they don't have one. They started paying a dividend, from what I could tell, back in 2021, and they have maintained the same dividend overall. I wish they had, I'm sorry, 5-year dividend yield right here. The payout ratio is they're showing as 0, which it can't be 0. There's got to be, unless they're negative. They may be negative, but they have not been paying their dividend yield for 5 years. So that's why it's not shown. So you just have to go by what their current is, forward annual dividend rate 0.14. You know, you'd want to track this another year or two to see where they're at. But right now we can't use dividend yield theory because they don't have 5 years of dividends to look at. Payout ratio being 0%, that's off. They are either negative or they should have this, and I'm assuming they are negative. Again, the numbers on this one don't look great, but we're going to run through it anyway. Going to look at free cash flow, we want growing free cash flow over time because typically if a company has growing free cash flow, they will have growing dividends. It's also a good sign that the company's in good health, right? They can pay down debt, they can make acquisitions, they can buy back shares, they can pay out a dividend. And we want, like I said, growing free cash flow because typically if a company has growing free cash flow and they're paying dividends, those dividends will be paid out and grow over time as well. 2020, you can see here, negative $69 million in free cash flow, not good. 2021, up to 21 million, so big jump up there, and they started repurchasing their own shares. 2022 up to 28 million, so a bit of a jump there. Now 2023, another big drop down. They're still repurchasing shares, but from 2022 down to 2023, decrease in free cash flow, and definitely have not been growing since 2020. So not good to see there, but I do like that they're rebuying their own shares, so hopefully they continue that. Although if their payout ratio is negative, they shouldn't be buying back shares. They should be paying down debt. Now we're going to jump over to stockanalysis.com, another site that I like. You pick any sites that you want. Just make sure you're not blindly looking at just one site, and you're using at least 2 sites to back check and make sure information is accurate and up to date. As you can see here, speaking of that, price targets were last updated on April 8th. They haven't updated anything since April 8th. So this is a month old, a little over a month old. And that's why I like to look at 2 sources. Sometimes these, are outdated reference points that we have from these sources. So that's why I recommend at least 2, if not 3 sources to make sure the information you're getting is accurate and up to date. But anyways, they have 10 analysts that have taken a look at this. They call it a consensus hold. I would agree. I would almost call it a sell based on the numbers I'm seeing. But I definitely wouldn't be adding anything if I own this position, and I'd be waiting to see how the numbers shake out over the next couple quarters. That's just my opinion. Low estimate of $13. They currently sit lower than their lowest estimate. So if it came back up to their low of 13, that would be a 9.06% increase. Average estimate of $15.95. That's pretty close to what we saw with Yahoo Finance. That's my dog out back. Apologies for the dog barking there. That would be a 33.81% increase, and if it happened to hit their high $20, that would be a 67.79% increase. All the while you could collect that, under 2% dividend yield. Very, very low dividend yield on this one. Now we're going to jump into statistics, look at return on equity and return on invested capital, and see how well this company is reinvesting back into itself using its capital. And to do that, I like 10% or better. Return on equity here, negative 3.9%. Not good. Return on invested capital, not even listed. I always look at that. If it's NA, it's negative. Same thing with earnings per share growth. I like 5% or better. They don't have it listed. I'm going to say that's negative. So that's not good. They did not have revenue growth forecasted either. Again, numbers don't look good on this one. I just thought we'd take a look at it because sometimes you might find value in companies like this, but I'm not seeing it in this one. We're going to take a look at the dividend history. Again, they are a quarterly payer. You can see they've been paying 35 cents consistently. There was one other year here. I went back to 2022, but they started paying in 2021. That's why we don't have enough to get a 5-year dividend yield history on them to do a dividend yield analysis. 5-year is what we want to look at. Dividend yield theory to see if it's potentially undervalued. That's the reason we can't do it. They just haven't been paying dividends long enough. Quarterly payout ratio is, again, I assume that's negative. They do not have any dividend growth. As you can see here, pretty steady. Buyback yield is 0.32%, which tells me they shouldn't be buying back shares if it's negative. They should be paying down debt instead. Shareholder yield is 0.85, so you're in the positive if you're as a shareholder, if you've been holding them for a while, depending on where you bought them, but that's at least good. Shareholder yield you want to see in the positive. Same thing with buyback yield. If a company is buying back shares, you want them to be doing it when the shares are real cheap and they're getting some value for them. When you see this negative number, that means that's not the case. Again, going back to 2020, you can see they were paying 35 cents, and they've held it steady since then. They do pay out on the February, May, August, November time frame, so a lot of companies pay out on the March time frame. This one is one that doesn't. But for me, this one is a no-go. Let's look at the overall. And as you can see why, right? Here's the screener. We understand the business. That's where we started. Again, if you start investing in individual stocks, you definitely want to look at the business, understand what they're selling, how they're making their revenue, and at least understand what the business is overall. Growing free cash flow, nope. It's been negative the last year at least. So from 2020 to 2022, or 22 to 2023, at least. We haven't seen the numbers for 2024 yet, but definitely not growing over the last 4 years. Growing dividend, nope, it's been steady since 2021. Dividend payout ratio of 75% or less. Now, that doesn't apply here. They say that it's not applicable, so that leads me to believe that it's not under 75%, that it may be over 100%. Check valuation based on dividend yield theory. We can't do that. It doesn't go back 5 years. Buy below current cost basis or within 15% of a 52-week low. It is within 15% of a 52-week low. It's right up against its 52-week low. Return on invested capital, return on equity, greater than industry average or 10% plus. I really just stick with the 10% plus. No, it's not. Earnings per share growth equal to industry or 5% plus. It was not 5% plus. It's not listed, which leads me to believe it's negative. So only 2 of the 8 means it doesn't even make it on my watch list, and that's where I'd be on this one. Again, I'd be a hold if I owned it. I would not be adding it if it was one that I was looking at. That's just my opinion. Take it for what it's worth. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of the videos. If you have a suggestion, like Krispy Kreme, a stock you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down there as well. I'll try to work it into the rotation. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount of comfortable losing it. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek legal advice. Counsel certified financial advisor.